Welcome to the Explainer. Today, we're diving deep into one of the most hyped-up listings of the year, the HashKey IPO. We're going to tear down the prospectus, get into the business, the numbers, and all the hidden risks to help you figure out if this is actually a smart move.
Let's kick things off with this quote right here. A market price deal riding on narrative alone. This is so important because, really, our whole job today is to put that idea to the test. Is HashKey a solid, investable company, or is it just a fantastic story? We're about to see if that narrative can actually stand up to some serious scrutiny.
All right, so here's how we're going to break it all down. First up, we'll look at the story HashKey is selling to investors. Then, and this is the important part, we'll crash into the harsh reality of its financials. After that, we're going to poke holes in its business model and dig into the, let's say, interesting power structure. And finally, we'll wrap it all up and give you a clear verdict on whether to subscribe. Okay, Section 1. So what's the big story here? What is HashKey actually selling? Well, it's a really powerful one. They're basically positioning themselves as the only game in town, the licensed high-end hotel, for the serious, big-money players who want to get into crypto the right way.
I mean, just think about it. The crypto market is pretty much the Wild West, right? It's unregulated, it's chaotic, it's risky, and HashKey, they've built this government-licensed safe house right in the middle of all that chaos. Now, this isn't for your average retail trader looking for a thrill. No, this is for the big guns, the institutions, the banks, the hedge funds, the family offices, the folks who need security and compliance above everything else.
So how do they actually make money from all this? Well, it's a three-part system. First, they run a trading platform, taking a slice of every trade, just like a regular stock exchange. Simple enough. Second, they've got these on-chain services, like staking. You can think of this like being a digital landlord. You're earning rent on crypto assets. And third, they run asset management funds, charging fees just like any old fund manager would.
Okay, so what's their biggest advantage? Their moat, so to speak? It's all about those licenses. Getting these regulatory licenses is not easy. I mean, it takes years and millions of dollars, which creates a huge barrier for anyone else trying to get in. So for those big financial institutions that absolutely have to play by the rules, HashKey looks like one of the only legitimate partners in all of Asia. So there you have it. That's the story. A licensed, secure gateway for big money. It's a great story, a really appealing narrative. But as investors, we can't just buy the story. We have to look at the numbers, at the financial reality. And, well, this is where things start to get complicated.
Which brings us right to Section 2, the cash-burning machine. And honestly, the financials tell a completely different story, a much more alarming one than that slick marketing pitch we just heard.
Okay, just look at these numbers. This table shows a massive contradiction. Zero in on 2024. Revenue absolutely exploded, right? It grew by 250% to over $720 million. That looks amazing on the surface. But then, look at the next line. The net loss doubled to almost $1.2 billion. And even worse, the company burned through more cash from its operations. So what does that tell you? It's growing, sure, but it's bleeding money faster than ever before.
And this chart right here, it perfectly shows the root of the problem. The company's gross margin has just collapsed. It's gone from a crazy high 97% all the way down to 65%. So why is that happening? Well, it's because their main engine for growth, that compliant exchange business, is just incredibly expensive to run. It reveals a really harsh truth. Compliant crypto trading is a bitter business. It's low margin, high cost, the whole shebang.
So what's the bottom line here? It's this. This IPO isn't really about funding growth. It's about survival. Let's be blunt. The company is currently insolvent. It has net debt of over 1.5 billion Hong Kong dollars. So the money they raised from this IPO, it's just going to keep the lights on for maybe another 2.5 years at the rate they're burning cash.
And look, these financial problems aren't just some temporary blip on the radar. No, they point to some really fundamental weaknesses in the business model itself. It shows that the company's famous moat isn't nearly as strong as they want you to believe.
Okay, remember that huge revenue growth we saw in 2024? The number that looks so good? Well, here's the catch. The vast majority of it didn't even come from its main Hong Kong market. It came from Bermuda, a business that, get this, they've now decided to exit. So as you can see in the first half of 2025, that revenue stream is basically gone, vanished. That whole 2024 growth story, yeah, it was a mirage.
On top of that, the business model is just dangerously fragile. For one, it's completely at the mercy of Bitcoin and Ethereum's price swings. Then, it's dependent on an external company for its core technology, and we're definitely going to come back to that in a minute. And finally, it is critically dependent on its 64-year-old founder, Dr. Zhao, who is the chairman, the CEO, and the only executive director. I mean, any single one of these dependencies is a major red flag.
Right. That dependency on an outside tech provider, that's the thread we need to pull. Because it leads us to the most critical and, frankly, the most concerning part of this whole analysis, the corporate governance. Who really calls the shots at HashKey?
So who's really running the show here? Well, the founder, Dr. Zhao, is the face of the company. He runs it day to day. But the ultimate controller, that's Mr. Lu Weiting, the chairman of the giant Chinese conglomerate Wansheng Group. Through this really complex setup with employee stock plans, Mr. Lu controls over 60% of the voting power. That gives him absolute, ironclad control over everything the company does.
And this table is where that risk becomes crystal clear. HashKey's core technology, its trading systems, its security, everything, is outsourced to Wansheng blockchain. And who controls Wansheng blockchain? You guessed it, its own majority shareholder, Mr. Lu. In 2024 alone, HashKey paid them nearly 200 million Hong Kong dollars. But look at the future projection. They're on the hook to pay another 1.7 billion over the next few years. This basically makes Wansheng a shadow tech department, and it creates this massive conflict of interest where profits can just be siphoned away from public shareholders like you.
Okay, so after peeling back all those layers, from that shiny story to the ugly financials and the really risky governance, let's put it all together. Let's get to the final verdict. Should you subscribe to this IPO?
So you've got the bull case versus the bear case. The bull case is pretty simple, right? It's the first licensed crypto IPO, which gives it that scarcity value. You could argue its valuation is cheaper than its only real competitor, OSL Group. And of course, it had that monster revenue growth in 2024. But as we've just spent the last few minutes discovering, every single one of those points has a huge asterisk next to it. That scarcity isn't driving a ton of demand. The 2024 revenue has basically disappeared, and the business is still burning cash with no clear way to become profitable, all while being run under a super risky governance structure.
So, given the pretty weak market sentiment right now, and more importantly, all the major risks we've just uncovered in the financials and the governance, the smartest play here is probably one of two things. Either pass on this IPO completely, or if you're a true believer in the long-term story, maybe, and I mean maybe, you take a very small speculative position.
And all of that leads us to a final rating of 3.5 stars. Now, that might not sound terrible, but you have to understand it's only slightly better than some other recent IPOs that have performed really badly. So clearing that bar isn't exactly a huge accomplishment in this market.
And really, that's the big question this IPO leaves us with, isn't it? Are you buying a piece of the future, the inevitable, compliant, regulated world of cryptocurrency? Or are you just funding a flawed, cash-burning business that has major conflicts of interest baked right into its DNA? Well, that's for you to decide.